Hi and welcome to StockInvest.us podcast for week 44, the one stock podcast that you really want to have on your favorite list. How did last week's trading tips go? Well, they went sky high, especially MULN and NIO, giving more than 20% profit each of them. What about the others? Well, you just have to wait till the end of the podcast where I will tell you the results and this week's trading tips. And Nasdaq did very well as well, up more than 2%. Dow Jones even better, more than 5% gain for Dow Jones last week. Will it last this week? Or will we get back into that red furnace that we've been in for so long? These are some of the many questions I will try to answer during the podcast. We will, as usual, always start with the market. What can we expect for the market this week? There are a few things coming up this week. Fed will have a meeting on Wednesday. That will affect the market. Will it go for green? Will it go for red? This is one of the few things I will try to discuss. And a few other things, of course. What about the trading signals? How many buy signals are there out there right now? For instance, for Nasdaq, are we again heading where buy signals is too high and you can expect a reaction down? Or will it be more upturn? First, and as always, you have to listen to the disclaimer. Then I will be back. My name is Jim, and I will be back just shortly after the disclaimer with this week's market insights and trading tips.
Hello everyone. Welcome to the StockInvest.us weekly stock and crypto podcast. The podcast is hosted by StockInvest.us co-founder and Golden Star Signal inventor, Jim Stromberg, who has been actively trading since 1996. If you are watching us on YouTube, make sure to hit like and notification bell so you will be first to know when we post a new video. This podcast is also available on Spotify, Apple Podcasts, Anchor, and other audio sources. Ensure you listen to the entire podcast so you don't miss out on some key tips needed for this week's strategy.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
Sometimes I start a podcast saying that it should last some 20-30 minutes, and it ended up lasting 40 minutes. And the reason for this is, as I go into the podcast, I realize there is more things I want to tell you. And why do I want to tell you things? Is to build up a good background. Because that's one of the best lessons I can teach you, is try not to buy tickers on random just because it's written on Reddit or wherever you find information. Try to build up a background for why you invest, how much you invest, how big your portfolio is, etc. Always have a strong relation to the reasons why. Exactly why do you do the things you do. So when I give this background for what I think will happen in the week ahead of us, the big things, the big concerns, and how I move my stocks in and out in different sectors, it is to give you an understanding for the reasoning exactly why I do it. And last week I told you that I thought it could be a wild week. We were balancing on that edge, and I even went for 5 trading tips. And for those following know that I've been very conservative. As I expected downturns in the market, I usually had 2-3 trading tips, but last week I wanted to go strong because I thought it could be a good week, and what a good week it became. MULN, NIO more than 20% on each, and the other other 3 did very well as well. We will get back to that. But what are the things for the week ahead of us? Will this be a green week? Dow Jones is up 3 weeks in a row, going to, no matter almost what happens, will close October extremely well. Has to be the biggest crash of history for Dow Jones not to end October in a very good fashion. Nasdaq had 2 green weeks last week, ending up 2.23%. Was struggling a bit with the bad quarter results from big tech companies. And these are the things that I warned you about before the quarter results, that we are heading into and still are in this quarter season where things will move up and down. And when Google put out the bad quarter results, that will hit anything related, for instance, to advertising. So it will affect other stocks. That's why you should have a strong relation to information about quarter results. When will they come? How do the stock usually do? And what do people expect? So you're not taken by surprise. And one company that really took people by a huge negative surprise was Meta, losing more money than expected. Plunged 30%, and that took a huge toll on the market and a lot of investors, of course. But for me, that's an opportunity, and as you will hear in the trading tips, I think it is time to scoop some Meta stocks at this level for a short-term trade. Anyway, we are in a new week. Again, there will be many quarter results coming. I will mention a few of them. But the main focus maybe for the week, the two main focuses for the week will be the Fed rate decision on Wednesday. Everyone expects 0.75. So it has to be very bad for the market to really take a scare of it. I think because due to recent development in the workforce, other things, some of the market may hope for 0.5, and that 0.75 can be considered at the very high end, even though most expect 0.75. So I think if we hit in on 0.75, it could cause a very red day and set the tone even for all of November. So Wednesday is for sure a day that you want to pay attention to because Fed will give their decision of the interest rates. It's often not so much about the interest rate itself, but it's also what they signal. Do they say that they think the inflation is peaking out? Do they think that the next few meetings will not be so hawkish, meaning that they will not increase the interest rates as fast as they have done so far? So it's very important to get that information. And I'm both happy and sad to say that I was correct about the interest rates. When you heard Yellen, you heard everyone say that no, inflation is transitory and there will not be very fast interest rates. I told you that the only way they can fight this is by increasing interest rates fast, and US has really increased their interest rates fast. The downside to this, and these are the things that we will see forward, is that at some point this really kicks into the economy. And what we have to understand is that most governments across the world, and especially EU these days, they are printing money like crazy. So they print money with one hand and try to increase interest rates with other hand, and these things, they will not end up well. I'll not discuss too much about it. I told you I think it will be a very hard winter ahead of us in terms of energy, why you should invest into oil, etc. And that these things, they will lead to recession and stagflation, and it will be some hard time. But as I also told you, the stock market will turn long before everything else, so we can be close to a place where market will turn. But let's get back to the week ahead of us. Wednesday, Fed decision. Thursday, work numbers for October. People is going to pay close attention to the work numbers. They will increase. So far they haven't increased in the pace I thought, but it is a lot to do with many different things. They are printing money like crazy. In addition to this, a lot of people decided to stay behind after COVID, not re-registering for unemployment, etc. And these things, they will come. Now the interest rate is going up, and anyone following the news know that most businesses struggle with a high energy cost. I even saw, for instance, that the Norwegian sport club, biggest sport club, they had a huge loss last quarter mainly because of the energy cost. And you can read restaurants going bankrupt, and you can read big businesses saying that we have to shut down production because it's way too expensive. These things, they are happening, they will kick in, and unemployment rate will increase, and it might just increase very drastically. Right now, that is what it looks to me, that it will maybe even for the forthcoming months suddenly start to kick in at a very strong pace, removing a lot of buying power from the markets and causing all kind of other disruptions. For the rest of the week, there will be different other news. And I always said to you that keep an eye on the Ukraine conflict. I think it will escalate. The latest news in this, as far as I can see, is that the US is planning to put small nuclear strategic weapons in Europe closer to Russia. At some point, things has to happen in the Ukraine conflict. Of course, it can drag out for 20 years, but everything is still building up, and that will cause anything in the market if it happens. So keep an eye on that as well. The other thing that we like to keep an eye on, as I told you, oil. I believe oil will just continue fast upwards. Oil went up $3 last week, currently trading at 87. We know that Biden released 15 million extra barrels of oil, trying to dampen the oil price. But it sticks, and I believe, now we're heading into winter season, that oil and oil price will just continue to kick upwards. Actually, anything related to energy, and I won't just say what I've been saying for so long, since oil was 20. Oil shares and energy stocks, gas stocks, whatever it is, most likely is the place where you want to have a part of your portfolio. Been highly successful so, and I think it will continue. I think oil may actually, in worst case, top out at 200. Hopefully I'm wrong, because oil going up is not good neither for the stock markets, neither good for the economy. Of course for the oil companies, but not for the economy in general. So I hope I'm wrong, but that's what I believe. That's where I put my money. I put my money into oil and energy shares because I think that's where you can hedge the best, meaning low risk, strong upside. Gold fell almost by $20 last week to $1,639. Still just floating. It is down a little bit due to the high dollar, the strong dollar, so it's kept a little bit down. But I guess, and I believe, as I said many times before, I believe gold will continue upwards. Should happen anytime soon that we start to see more movements into gold, especially when the dollar starts to weaken. The dollar can only stay strong for a certain amount of time. At some point it will lose momentum, and we are getting very close to that point. I think so close that I'm actually thinking about maybe trading into currency a little bit. We will see. 10-year treasury yield actually fell from 420 to 401. It's a good thing for the markets, but interest rates is expected to go up, and this week again the 10-year treasury yield should start to move. And for those who is very interested, there are strange things happening with the short and the long-term interest rates, and these things usually indicate strong movements in stock market and the recessions. So is that where we're heading? Strong falls? We will try to get to a conclusion very soon. First quarter results, then we will look at some signals, and we'll look at the chart, and you'll have my conclusion. And about the quarter results, this week will be many quarter results. I cannot mention them all. I can just mention those I think that you can pay attention to. ConocoPhillips, which we bought in the trading portfolio 2 weeks ago, and sadly was cut by stop loss. Very good one. PayPal will come on Thursday, and Conoco also Thursday. You will have Starbucks. You will have Moderna. There is 4 different segments for you straight there. You will have Coinbase, and very funny to see that crypto actually is moving up a little bit, and my bet into Dogecoin seems to start to pay off again. have to go back to many podcasts to go to see the crypto, but very nice indeed. Hopefully it will continue that way and we will finally be strong green on Dogecoin. We'll see how it moves. Friday will be Warren Buffett and Berkshire. Both the A and the B stock will be along with Dominion Energy, Honda Motor, Royal Caribbean Cruise Lines, for instance. So it's an interesting week. I think that especially the last part of the week is interesting, and I think that comes together then with the Fed decision and the work numbers on Thursday mean that the last part of the week can be very special. Should be yet another volatile week. What about the signals at StockInvest.us? We analyze more than 38,000 tickers now, but 26, 27 some thousand tickers are qualified for our buy, sell and hold recommendations. And based on this, we can tell how many stocks are giving a buy, a sell or hold. And we know that if the buy is too high, you can expect a change. Same thing if sell is too high, you can expect a change. So it's a number that has been working for a long time. Every time we had very low amount of buy signals, we had a strong buying position. Happened 4 weeks back for Nasdaq when it hit all low at 4 and 11. And as you know, we had 2 very strong weeks for Nasdaq and Dow Jones even more so. Right now there is 26% buy signals. That is starting to get high in my opinion. It's not very high, but starting to get high. And if you're a new listener, very high is if we get up to 40, you can just do anything else than put your money in stocks, because usually, unless you're shorting, because usually that means a huge selling opportunity. 26 is getting starting to get high. Nasdaq 31 jumping up from 20 to 31% buy signals, also starting to get very high. So we are close to a place where you might reduce your risk a little bit. At the same time, it's where things also can go very fast. So we are in a volatile territory. And if you look at New York Stock Exchange, 39 up from 26 to 39, that is not good at all. To me, that sounds like we might have a mini rally. It can happen that we'll see a mini rally that no one really can explain. Nasdaq and Dow Jones run for 2-3 days. Then to have super huge falls, or the falls can start quite fast. 39 is for sure a level that means to me reduce your risk. Going to London, 19% up from 11, Tokyo from 23 to 22, so more or less unchanged in Tokyo, and Chess and China fell back just as expected. Was up at 22, that was way too high because it moved up from 5 to 22, 2 big jump in once. That means that you will have a strong correction down, which happened. All in all, the buy and sell signal says that we are again getting high, and I think that looking at the chart will give us a much clearer picture. And if you're listening to this podcast on Spotify or some other audio media, it will be available on YouTube, where you also can see the charts. Makes it a little bit easier. I'll try to explain so you can visualize it. And what do we see? Well, we see that Nasdaq is in a very strong falling trend. Has been so for months and months. Right now it is at the top of the trend. As I see it, there is 2-3 very good things. The first good thing is that it was at the top of the trend just some week ago, fell a little bit back and is again pushing up. I love that sign, because here is the thing: Nasdaq will not try to break the trend, and usually to break a trend which is this strong, you have to do the following. You have to go up from the bottom of the trend to the top of the trend, fall a little back, gather some momentum, then you have a momentum enough to break the trend. And unless something really takes the market by surprise, and by this I mean some very bad negative news, the odds for Nasdaq breaking the falling trend is very good. It's absolutely very good. It's much higher chance that the Nasdaq finally will break that falling trend, go in for a short-term rally, than there is for it to continue downwards. But it only takes a bad news to change this picture. In addition to this, the short-term moving average is about crossing up through the long-term moving average, and that will give a golden cross or a strong buy signal from the relation between the two moving averages. Last time this happened is if we go back a few months, and you can see on the chart, you can see a red cross happened somewhere around August 26th, gave a huge buy signal called a sell cross from, or a death cross, depends what the literature you read, from the relation between the two moving averages. And at that point Nasdaq was at 12, fell all the way down to 10,000, so it was a 2,000 point fall last time this huge signal was released. Now we are in a situation where everything indicates that it might turn into a new signal, but this time a buy signal. There is buy signals from short-term moving average and long-term moving average as is, but today and the next few days will be very important, and there is very little resistance upwards to 11,500, and that journey should be very fast. After that it starts to become more resistance, and the journey upward should go like in a zigzag pattern. What I do love the most is that we have a bottom at 10,300. We just have to stay above this, float above this. That will increase any chance for a further upturn. So looking at the chart, yes, it is in a negative trend. Usually it stays within the trend, and you can expect it to continue downwards, and that may very well happen. We will know today, will the markets fall and everything continues within the trend, or are we poisoned for a trend break? And remember, when it goes for a trend break, it doesn't go directly from falling to rising. Usually it goes from falling to less falling or horizontal. Take some time to establish an upward trend. So I'm not saying that we are establishing an upward trend. I'm just saying that the very short-term picture is better than it has been for a very long time. Last time I said it was a good opportunity. It was bouncing around 10,500, saying that there was a good chance that it could break up, and it will be hammock if it breaks down. Situation is just the same. If it falls below 10,500, it can start to fall extremely fast. Conclusion for this week is, last week I was saying that I really didn't know, because it could go both ways. It could go very, very nicely upwards, or it could fall downwards. The situation is more or less the same, but now it is looking a little more positive, simply because we are further up, giving more support below, reducing the risk a little bit. And that means that we can do some risky trades in the trading tips, trying to utilize a potential strong market ahead. Conclusion for this week is that I think it's a fair chance that it will be a green week. You have to pay attention to the 10,500 level, of course. Pay attention to the news, especially last week may be critical. This might be a very likely scenario. During the day, we could start red, end up green, going up to 10,500, hitting the resistance at 10,500, start to go back, get fueled by some bad news on Wednesday, Thursday, and we are back into a very bad scenario again. May very well happen, but I think that I'll put a positive side with saying that the week is a fair chance that the week will end green. And these things may very well build up to a good short-term position, but that long-term negative thing is still not over. We need more bottoms to confirm that we finally are at the bottom. I still believe there is more negative to come, but right now short-term picture is not worst, and I will try to use that in the trading tips, because that's what's coming up. Trading tips for this week. Finally, we are at the trading tips, the one section that most of you like the most. And I do understand it because it's all about trading, trying to make money, trying to find the right ticker. And of course, that's the one thing that we do. But I made an oath to myself when I started this podcast series almost 3 years ago. The aim of it is helping you to reduce your losses, increase your gains, and really try to make a difference for you. And the only way to do that is trying to help you build some knowledge around stock trading, trying to give you insights that will help you make better decisions. And all I said in the last 20 minutes is building up to this moment, how I position myself for the week. And if you're a new listener and you do not know me, every Monday I put out this podcast. I've been doing so since the beginning of pandemic. It became a small hobby, pushing it every month, and now it is almost a habit pushing this podcast. What I do is I actually put a bet every Monday. I think only one or twice I have moved it to later in the week that I didn't buy the stock that I recommend on Monday because the markets were too shaky and I was wanting to get into the position. But to show you real time and real life examples, I actually get into the stocks. So last week I told you that I thought market could be very, very good, that it could be a place where you could scoop up some profit, and I wanted to try that, increase my risk because it was a fair chance for an upside, as I told you, and especially for some of these undervalued stocks to really kick in hard. We had Zomedica open, and we had Zomedica open since week 34. I will get back to Zomedica, but I said I will try to buy two, NIO, Chevron and MULN, and that would give me high enough risk into NIO, MULN and 2 with Chevron as a little base for it. And I thought some of them could do very, very well. What I did is on Monday I was trying to find the low as I could for the stocks. I was quite okay, and you wonder when do and how can I find my low. I let the stock trading start. Before trading day I look at the stocks that I'm going to buy and look where do they have their support. And if the stock starts on a red note, I usually place my bet close to what I consider to support, and in most cases this usually is between 30 to let's say 45 minutes after markets open. It's usually that low part. Sometimes it's different. I look at the stock. If the trend is very, very strong downwards, I just wait till I have first few signals of an upturn. Sometimes I manage to hit very low, but very seldom I manage to hit that very, very low. I usually end up close to low, which is perfectly fine with me. Reduces the risk. I did this last week. I got in to 2 at 322. I'm not sure how far it went down, if it was like 315, 16 or something, but I got it at 322. Very happy about that. And the stock did very well during the week. It was not cut by my stop loss. It was up at 367 or something, maybe even higher, ending the week at 355, giving me a current profit of 11.18%. It's not sold, so 2 is still open trade. I also bought NIO because I said that I believe these stocks have huge potential. I was able to get in a NIO at 855. It was maybe 820-30 low. I got in at 825 and it immediately kicked off and went very, 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 very well up. I think it was high up, maybe it even past 11. Turned and was cut by stop loss because I cannot sit trade. I have other things to do. I cannot sit and trade minute by minute, so sometimes I just put on the trailing stop loss. In any case, I put on trailing stop loss, but I sometimes adjust it. In the case of NIO, I put up a 5% trailing stop loss because I thought that could hold water. It fell a little bit back, was cut at 10.53. So at 10.53 my stocks were sold, giving me 23.16% profit. So nice to see these huge numbers again after we've been trading 2, 3, 4, 5% for a long time. Because of bad markets, as I said, that's very, very good. But finally we have some 20+% stocks again. Chevron got it at 172, and you know, if you follow this podcast, we've been in and out of Chevron endless amount of times, and I said that energy is good, and you may ask, so why don't you just stay in Chevron? Because we bought Chevron, for instance, in week 39 at $141, selling at 161, was cut by stop loss, giving 14% profit back then. Now Chevron ended at 179.88 this week. So you may ask, why don't you just sit it? Well, I have an oil portfolio as well where I sit, but this is the weekly trading portfolio, and I let it follow some strict rules where trailing stop loss is one of them. Got Chevron $172.1, still is open, just went up during the week, not enough to be cut by stop loss, ending at 179.88, up 4.52% in the week. So not as much as MULN, of course, but as I said, this is an anchor. If markets go short, I thought that Chevron would hold good, so my portfolio wouldn't really crash that hard. The last stock was based on a tip from a user. The user posted a comment on StockInvest.us asking something about MULN. I had a quick look and I realized that I almost forgot about MULN because I used to trade MULN a long time back. As I said, in week 9 we traded MULN, bought it at 123, sold 167, giving 35%, almost 36% profit. So MULN we had good business with before. So I checked in MULN because I really looked, I liked what I saw at the chart. Got in MULN at 47 cents, 47.2 cents to be exact. And MULN just hit on the train straight away, moving upwards, was up at 161.62 cents. Started to fall back, was cut by stop loss at 57.95 cents, giving 22.78% profit. Such a nice profit in short term. So from the stocks last week, I bought America in week 34. I told you this stock, we will not have trailing stop loss. It will be high risk stocks. We'll keep it in portfolio because when it starts to move, it will go too fast. I will not be able to get in. We done America not hundreds of times, but we done America many times. And as I said, this stock, I always end up with profit. But it may be a waiting game, and it really has become a waiting game because America didn't move much last week. 22.5 cents or something ending the week. It's currently at a loss because we bought it at 26 cents. I still believe America is a very good choice. I think it will move. I'm not sure exactly when, but when it moves, it will go very fast. And I think that will happen, and I will do like always. I believe. I hope make some good money on America. America is still open. It's recommended as well, but you use it as a high risk stocks that you put in the end of your portfolio, and you don't expect much. NIO was sold, MULN was sold. I'm sitting with TWO and CVX, Chevron, 2 and Chevron. So I have 3 stocks in the portfolio. I don't think market is crazy enough to go for 10 stocks. I think it's a huge opportunity, as I said in the podcast. I think it's a very huge opportunity this week that things might go good, especially first part of the week. And if these things stick in the right way in the end of the week, it may even be much better. But I found 2 stocks, which I again will trade because, as I said, I like the risk I see, and I think we can take some risk. We have Chevron. Will be a nice solid base. 2 is a little risky because it's that kind of stock. But I will add 2 risky stocks. And if you follow the podcast and you listen to what I said it quite early. I think there is a buying opportunity in Meta. Meta was hammered last week. I think that is a huge buying opportunity. I will try to scoop up Meta, trying to get it around 98 something. We'll see how it starts today. But Meta for sure is a stock that I think we can do some good stuff in. How much? I'm not sure yet, but I think in the very short term, there was an overreaction. Meta can easily cut a lot of their costs, making them more profitable. We are in Q4, which is the best quarter in terms of advertising space. We see other stocks in the segment starting to show some nice movements. So I think these big, huge professionals, they will go to their analytic department after trashing Meta last week and already scooping up a lot of stocks. They will go to their analytics and say push out some heavy, good Meta analysis. So I will not be surprised if you suddenly start to read all during week, Meta is undervalued, should be blah, 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 and that you see the stock move up anywhere from 5 to 10% minimum. So that's where I want to be. 5%, I love it any given day of the week. And can we do 10%? Even better. So Meta will be one of the new tickers. And then I will try to do NIO again, because simply think there is a buying opportunity in NIO. I told you before, I believe in green technology, and some of these China stocks you should be very careful about. But I want that risk. I want to try play NIO again. So I'll try to get into NIO and Meta as low as I can today. I have 2 from before. I have Chevron from before. And you may ask, so do you recommend 2 and Chevron? Be a little bit more careful about these stocks. If you have a little patience, I really recommend Chevron. But Chevron is also starting to get a little high. Sumedica I can recommend for sure, and Meta and NIO will be the 2 cases. That leaves for a high risk portfolio. We are still on the high risk end, and I will tune that screw, because as I said, signals are getting high. I will reduce my risk a little bit. What I will do, I'll get NIO, I will get Meta, I will put on a trailing stop loss, and I will be happy with whatever happens. And should the markets go south, I have trailing stop loss on 2, I have trailing stop loss on Chevron. I will make money no matter what happens in this stock. It might not be much, but they will be profitable. That's how trailing stop loss works. Why you should use it, read more up about it. And since we are at the end of the podcast, I've been doing this for 3 years, and it varies a little bit depending if it's on audio, video, has some good view rates. But I really would like to see more. So if you like this podcast and you want me to continue to give you the podcast every Monday, please shout out a small comment below or give it a like, so I can have some incentives myself to continue. Because as I told you, we are on the 3rd year of this podcast. We're coming up to Christmas, and again I will have to consider, should I spend 1 more year giving you these tips and tricks. And as you have noticed, we are more and more into trading, just as I promised you. When markets were bad, I told you we are heading for bad times, reducing. I also told you that slowly I will increase, and we will get more and more deeper into the trading, because now markets are more attractive than before. Will there be this huge fall? Sadly, yes, I think it's a huge chance it happened that markets may crash. That is why, whatever you do not play with gearing. Yes, you may lose some, and you may shout at me and say that I was wrong. Market went up better than I thought, and you could have made much more money if you had just geared a little bit, using money that is not yours, it's the brokers. But remember, that is the way to lose money, because things can turn very bad. I can guarantee you that many of the Meta investors did not, even in their wildest dream, expect Meta to fall as hard as it did. Sadly, that is some of the hardships of stock trading. We have to hedge as good as we can against these things, and that's why we do the background things. That is why right now I have like 35, maybe 38% of my investments into stocks, simply because I'm still not sure market will head for an upturn. I will not go fully in before I really see a buying opportunity, and that buying opportunity may be this final fall. Until we see several significant bottoms, I will stay a little restrictive on my investments, and I actually recommend you to do the same. Oil, I love, and as I told you, huge part is in oil. During this very red period, I made money, but as I told you, I love these periods. That's usually where I do very good. Being a little restrictive, following strategies. And that, my friends, are the end of this week's podcast. As usual, I hope you have a very nice week ahead of you. Here in Vilnius, where I'm sitting right now, it's such a beautiful weather outside. It's starting to get cold, even so the first signs of frost this morning, 2 degrees. But sun is shining, and it's such a nice time to have, for instance, a walk, or if you do like I do, metal searching. There is more to life than trading, and we are here to make money, and we will continue to make money. Hopefully the trading tips that I just gave you will kick in this week. Just remember, do not be greedy. Take whatever profit you can. Be happy. I use trading stop loss 3 to 5%, depends on the stock. Then I don't have to pay attention all the week. Until next week, my friends, have a beautiful week.